Here's a look at where markets ended the week after the president threw down the gauntlet on Truth Social early Friday morning. Trump is now recommending a 50% straight tariff on the European Union starting June 1st, calling the EU, quote, difficult to deal with. He's also threatening Apple with a 25% tariff if it doesn't move iPhone production to the U.S. and out of China and India. Here to react to the news, Crossmark Global Investments CEO and CIO, Bob Dahl. Bob, great to see you. I want to get your take on the new moves by the president. He is admitting it's been difficult to negotiate with the European Union and that tariffs are not an idle threat. He's saying June 1st, they'll be faced with a 50% tariff. Your thoughts?
Yeah, 50 is a pretty big number, Jackie, as you know. Look, the 90-day window we knew would be difficult. You can't solve these things overnight. They're intractable problems that have lasted years. So the president is basically saying, hey, Europe, come our way. Have a conversation. Lighten up. And maybe we'll get some progress. But it's going to be a bumpy ride.
And what do you make of the messaging to Tim Cook of Apple? The president saying iPhones that are consumed here in the United States should be made here in the United States. If you still want to keep bringing them in, you're going to face a 25% tariff. But if you want to make them here, it'll be much more profitable.
Yeah, there's a message there. And look, it takes time to move manufacturing. My guess is Mr. Cook will make as many here in the U.S. as he can and more over time because they don't want to face those kind of increases just because it's going across the border. So message heard.
Yeah. And this is all happening in the backdrop of the big, beautiful bill that was passed by the House. It now moves on to the Senate. The big concern, of course, is that the tax cuts have a price tag and that the spending cuts aren't necessarily deep enough. You know, Wall Street was really looking the bond market specifically at this during the week. And I believe it was on Wednesday that Treasury auction didn't go so well. It sent the market down and it sent yields higher. The concern is that some of these tax cuts and the provisions in this bill will add to the deficit, while you've got Republicans saying, no, we're going to grow our way out of it. What do you think?
Yeah, I think it's a tall order to grow out of the big numbers that are being put out there. Look, the bond market is sending a message. Don't overdo it. And the bill as it now stands in the market's mind is overdone. Too much new debt on top of already too much debt. So legislators are going to have to think hard about balancing the short term and the long term, and that's not easy.
Okay, this is what Federal Reserve Governor Christopher Waller had to say. Listen.
Everybody I've talked to in the financial markets, they're staring at the bill, and they thought it was going to be much more in terms of fiscal restraint, and they're not necessarily seeing it. And therefore, there's going to be a lot of issuance of treasuries. And in order for them to buy these things, they want it at a lower price and therefore a higher yield. So that's just what you're seeing.
And the Wall Street Journal editorial board says, don't look at the bill. They say that features more spending restraint than the Biden Democrats ever offered. Meanwhile, the extension of those 2017 tax reforms are the biggest gesture in there. So anyone in Washington is making in the direction of economic growth. It's preposterous to argue that a bill that largely extends current law is suddenly causing investors to flee U.S. assets. At the same time, there's just a lot of discrepancy over how you're looking at this, what the scoring is. Are these old tax cuts that are just being extended? Are they considered new? How much debt will they add? Will the Senate then go and say, you know what, we'll have some deeper spending cuts? There's a lot of what ifs here.
There sure are, Jackie. And look, the Senate's going to have its turn, and we'll see some twists and turns on those very subjects. Look, countries that spend more on interest expense than defense usually start having big problems, and we're there now. Whether it's Republicans or Democrats over the last decades, most of them have spent money like drunken sailors. We have to change the tone and the tune and the direction if we're going to harness this problem, and this bill would be a great place to start.
Real quick, Bob, how do you navigate a market like this? Where do you invest and put capital to work?
I think you take your time. Look, the market had that 20% run after the 20% decline and got back to very expensive levels. So I think you just be patient and wait. Let the price come your way. We want to invest in companies that have strong free cash flow and high profitability. That should enable you to do better than the average stock.
All right, Bob Dahl, thank you so much.